Hello guys, it's a time for market forecast for the coming days. The main topic will be the economic situation in the United States because there is no end to speculation about the upcoming recession. So let's summarize what we know today and talk about how to interpret the data coming to us, because this week we will receive another inflation reading from the US, which of course is crucial for future valuations, be it currency pairs or major indices. Okay, so from the perspective of the calendar, the most important data is US inflation on the consumer side tomorrow and producers on Wednesday, which will probably determine the further course of a price and give a broader view of the matter. If in addition we see numbers significantly different from the forecasts, we can expect a medium-term direction, but we'll talk about that in detail in a moment. In addition to the CPI from the US, it is also worth paying attention to the GDP data from the Japan and the Eurozone, which we will receive tonight and tomorrow. Okay, so where are we finally? Inflation is down, employment is up, so where is this recession? Well, it must be said that the acceleration of the US economy changes the situation of Euro-USD. If there is no recession, then what is the point of buying the euro? We can see that the USD is regaining its former strength, but for how long? In turn again, the higher the interest rates, the more likely it is that a recession will start, albeit a little later. Economists have long argued over what will happen to the US economy. Will it fall into a recession, or will it be a soft landing in which GDP growth slows significantly but without a recession? Now, the voice is heard again that a strong jobs report has added a third option where we won't see any landing at all. According to Goldman Sachs, the probability of a recession in the US in 12 months fell from 35 to 25%. We see that the economy, instead of falling, on the contrary, starts to grow. This means that bears on Euro-USD return to their former strength, but unfortunately, this no-landing scenario is more of a temporary phenomenon. The Fed will be forced to raise the federal funds rate higher and keep it at the top longer than market suggests. They have already started adjusting their expectations. CME derivatives have a 90% chance that the cost of credit will rise above 5% compared to a 45% chance before the publication of US employment data for January. The odds that rates will remain at their highest level until the end of the year has increased from 3 to 45%. So, is a return to downtrend on US bonds and Euro-USD impossible then? Well, the increase in annual inflation expectations from 2.4 to 3.9% is conducive to the sale of treasury papers and the increase in their profitability. When the index stays down, the Fed may not be paying attention to what we call weakening financial conditions. However, when it starts to rise, the central bank must punish the markets. And it is the inflation data from the US for January that may intensify the declines in stock indices and the treasury bond yields, which will strengthen the dollar. I wouldn't bother with a slowdown in consumer prices from 6.5 to 6.2% and the headline index and the core inflation from 5.7 to 5.5 year on year. I think monthly indicators are more important, because acceleration of a CPI to 0.5% and core inflation to 0.4% on a monthly basis will once again prove that the Fed's work is far from over. Markets will believe in additional increase in the federal funds rate and abandon the dovish reversal that will return the dollar to its former glory. Year-on-year data are not as reliable due to the high base effect. Inflation accelerated significantly in 2022 and the prices need to rise quickly to surpass last year's figures. Most likely, the CPI will fall below 6%. If confirmed, this could be the basis for exiting short positions on Euro-USD and pushing the euro higher. However, if we see a higher acceleration of inflation month to month, it may contribute to a drop in Euro-USD. So, those who entered short trades at 107.05 should not panic just yet, at least not until the publication. In addition, I think that the idea of Euro-USD consolidation in the 106 to 185 range is still valid. So right now we will switch to Peter's, and he will give us his perspective with mostly basis on a technical analysis of the price chart. So on to you, Peter.
Hi folks, how you doing? Hopefully everything is alright on your side. Well, the CPI out of the US higher than what market was expecting. In that case, we've seen a little bit higher volatility. And well, when it comes to our live trading room on the Telegram group, we are long dollar already, and we are cashing some nice pips. So I strongly encourage you to join our Telegram group. Now, what we have when it comes to the market, when it comes to the majors, well, euro dollar, that's the thing here based on the daily chart. We are going to have a look what we might expect. So taking into the consideration what market did lately when we made new high after the strong move to the downside, we retest that level after the breakdown. So we are holding short position in our live trading room, and we are looking for the lower levels when it comes to the euro dollar. How long we are looking the market may go? Well, let's check the latest swing low over here, and we are talking about the levels close to level 10670. That's the possible target, and as you can see, we might see a little bit of the consolidation, but the data out of the US suggests that we might see even further breakdown, and that's what we expect, and we are looking for another lower level. In that case, it's going to be this swing low, and we are talking about the levels close to 105.30. So I'm looking, as long as we are below this level over here above 108, we are looking for lower levels. If we are going to get the close above, of course, the alternative scenario, we are looking for the retest. If we are going to go that way, we are going to see the retest of 110. So that's euro dollar. Next one, dollar yen. Here we are trying to get out of the latest weakness over here. If we are going to see the daily close above, strong daily close, then the next possible level is going to be very close to what we have right now, around 133.70. If we are going to make further move to the upside, 135.80, 136 as a next target. But if the daily close is going to be below 132.20, we might retest the lower levels we already seen with possible 130.50, 130 psychological level. So that's how I see the dollar yen, and I'm looking as of now for higher levels, but when it comes to the live trading room, we haven't entered any kind of the position. Now, cable, another good live trading room example. We are staying short. We are staying short from a 22, 25, 22, 30 level, and we are looking for the retest of the most recent low, this swing low over here. In that case, we are looking for 120.50, psychological 120, and if we are going to break through that level, we might see 118.75, 118.50 as a target. The bulls have to push the price higher and close above the most recent high over here to make the stop count possible, and to make and push the cable much higher. In that case, we are talking about the levels close to 124.50, 125 level. So that's all when it comes to the majors. Let's have a look what we have when it comes to the crypto. Well, here, that's the thing. we are below 2550, 25,500. That's the very negative thing, but the Bitcoin is trying to recover here, right? It looks quite good even with the higher inflation print, okay? So the support here right now is around 22,000, but of course we have to get back above 22,500 to make the things possible to retest the levels close to 27,500 and 30,000. I like the longs as long as we are above 22,000. And finally, Nasdaq daily chart, and we are pushing lower and trying to recover right now. We are still above the weekly open, but there are two things. From the bull's perspective, the thing is, if we are going to hold this bull flag, if that's the case, we might see higher levels up towards 13,200. But if we are going to break to the downside, watch out this particular level. In that case, we are talking about the levels or zone close to 12,000. If we are going to break through, the next one possible move to the downside is going to be down towards 11,900, and if we are going to break through that level, the next one is about 11,500. So watch out for the price action during the market working hours. And well, with that being said, wish you a great next trading session. I strongly encourage you to join our free Telegram trading group. Wish you all the best. Stay safe, see you around, take care, and goodbye.